Now let's talk about big tech leading the market higher today after 3 straight down days. Can you trust this bounce? Mark Lehman is the CEO of JMP Securities, and Michael Jones is the chairman and CEO of Caravel Concepts, an investment advisory firm. Mark, I'll begin with you. Do you trust it? What do you make of some of the warnings we've heard from Stan Druckenmiller and others over the past 24 hours?
Well, I trust that you can't go straight up and you can't go straight down. So a bounce like today is something you want to see, but I would not say it gets rid of the fears of the downside. We've had people fearing this rally since March, obviously, many on your show. But valuations really are at limits that we haven't seen in a very, very long time. So I'm fearful that if the market doesn't expand, if it doesn't widen out, keeping it in very, very few names is problematic for the fall. I said back in the part about Memorial Day that we're going to see a bunch of new names go public, and we're going to watch those and see if there's confirmation that the market could expand. All those names did very, very well. We're going to have a similar calendar after Labor Day. We're already starting to see it. Let's see how the absorption is as some of those fast-growing names. If we see some kind of information that they're being bought, it makes me feel better. If this narrows to the 5 or 6 names we've been talking about a lot, that's very troubling.
Michael, you made an interesting point, which is that a sell-off could actually hasten action out of Congress that you think is warranted, but it all kind of is circular logic to some extent, because if we don't sell off that much, then do we need the action and, you know, over and over we go?
Well, I think understanding why that a continued sell-off could actually be good for the market, you got to go back to say, what do we think has driven this market higher? And we think it's been, monetary accommodation from the Fed. They've been extraordinary in their liquidity provisions to financial markets, trillions injected. And we think the pullback was simply a result of no COVID-19 stimulus package, no more deficits for the Fed to have to finance, and that allowed them to hit the pause button on their money printing machine. So that's what we think caused the pullback. We think the pullback ends when you hear the hum of the Fed's money printing machine kicking back in gear. That probably requires more stimulus. That requires the president to probably arm twist some Republican senators. And the more the market drops, the more likely it is that President Trump worries about the impact of a declining market on his election. And he arm twists those senators into giving what the market will need for a sustained recovery.
Mark, it's Dom here. I'm curious, let's say that scenario does play out, that we do see the central bank step in, we see fiscal policies enacted. Then what goes on the shopping list? If you're playing the bounce up, what goes on that list to say, hey, if it pulls back more, this is what I'm buying?
Well, I think the president being down in the polls, there'll definitely be some action in Congress. If that's the case going into October, well, I think you're correct. We've been very hot on the stay-from-home economy, so Upwork is a great name for us. It's a name that will benefit from people hiring independent contractors around the globe to solve their problems. They had an IPO a couple years ago. The stock has a new CEO, Hayden Brown, who I think is going to be extraordinary for the company. And I think watch that stock, because stay from home is going to continue to be a theme. Evercore is another name we like. If you're going to play M&A and you're going to play a healthy economy, there's lots of capital out there. I think that is a great play for the rebound in M&A and big tickets that we're going to see, I think, going into the end of 2020 and 2021. I think that is absolutely going to happen.
You also like several...
Domo.
Go ahead. That's what I was going to say. You like several of the tech names, actually. Domo is one of them. Tell me about that and where you think there is an attractive opportunity in tech land.
Well, Domo's a name that a lot of investors know. It's been around a long time. They went public a few years ago. They've had a couple of stumbles. But for people who are working from home, for CEOs who are working from home, it's a name that allows them to see everything that's going on within their complex with one screenshot with their own mobile device or devices. That's an extraordinarily important thing for them. And they've had some stumbles. But after COVID hit, they've resurrected their business in a terrific way. Their backlog is going to grow through the third quarter. We're very confident. And although this sounds very expensive, it trades for 5 times revenue. When you look at what the SaaS names are trading for, that is inexpensive relative to its peer group. If it gets to a multiple closer to its peer group, stock's going up a lot.
Michael, I'll turn to you, and kind of given what you think overall about where we are in the political cycle and the stimulus that may or may not be on the way, where would you be advising the people put their money?
So first of all, I would probably be keeping some dry powder until we see the Fed re-engage. Remember, this could be a messy election. It could go several weeks of contested ballot counts and mail-in ballots that are still being counted. And you don't want to have that kind of political uncertainty unless the Fed is giving active support to the markets. So that would be our first thing, is let's make sure that the Fed is engaged so that we have their support in the case of any political uncertainty. And then once the Fed is engaged, I think, our experience from the last tech bubble is after you scare people in the real high flyers at 20 times revenue, they come back to tech, but they come back in a safer way. So you're probably thinking more the big cap names are going to be the real beneficiaries, the things that are only trading at 30 to 35 times earnings. I also think housing still has a long way to run. You compare valuations now than at the last housing bubble. We've got a lot of upside in the housing names because I think we're in the early innings of the housing bubble that the Fed policy could stimulate. And I also think there's a source of funds that people should be looking at in their high yield portfolios. High yield defaults could be 2 times the current yield on those portfolios. That's a great place to go for some money to fund into some of these better upside names.
There's so much in there that I could pick out, Michael. Let me just ask you about what you just said about the housing bubble, because I was looking at home prices in my hometown the other day, which, it's a college town. I thought that they would be hard hit by some of what we're seeing with the disruption to higher ed. It's the opposite. I mean, the home prices are much higher than I would have expected. And if that's true there, I wonder where else it's true. And if you're saying it's going to keep going, I hope we're not getting back into, housing bubble 2.0 territory here.
So, well, recognize that the housing bubble of 2005 and 6 was built on, funny mortgages, interest only, flex pay, and the like. This housing bubble is being built on, first and foremost, the lowest mortgage rates that we've ever seen in human history. And then second, a big demographic wave of folks like you, millennials that are ready to go out there and buy their first home or maybe even upgrade to their second home. So you've got good demographic support this time. And so far, underwriting has been fairly conservative. You haven't seen the gains that we saw in the middle 2000s. Now, an important thing happened last week. Affordability got back to average, which means those big home price appreciations have now fully offset the decline in interest rates. From here on, we're requiring more sacrifice to pay that higher price. I think it'll happen because of the powerful demographics and Fed stimulus, but watch for interest-only mortgages to reappear. That'll be the signal we're getting near the top.
All right. I love that. Give us the roadmap. Michael Jones, Mark Lehman, thank you both guys. Appreciate it very much today.